Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because I know there was a lot of concern earlier this week that Bitcoin would see a big breakdown below 90,000, but we had a feeling that perhaps that move below 90K on Monday was a trap for panic sellers and shorts, the same way Bitcoin's pump above 100K last week was a trap for FOMO buyers and longs. This is also why I called Monday's free weekly report Fighting the Fear, because we see the same exact story every single time. Whenever there's a pullback, everybody starts panicking near the low and saying the cycle is over. And whenever we're rallying, everybody is euphoric, calling for huge price targets. And now it looks like that move below 90K did in fact end up being a bear trap and false breakdown, which is usually quite a bullish reversal sign as long as we can confirm this on a weekly close coming up on Sunday. All we have to do now is get a confirmation close above our range high, and Bitcoin likely sees a new all-time high sometime this month or early February. This also aligns almost perfectly with what we've seen in previous cycles, with Bitcoin having a January slump in the post-halving year. We can see it very clearly in 2017. We had a very quick and very aggressive correction in January. Then we rallied to new all-time highs. Same thing in 2021, aggressive correction in January and then huge rally to new all-time highs. But notice how these corrections are taking longer and longer each cycle as Bitcoin becomes less volatile and more established. But so far in this post-halving year of 2025, we've seen that correction in early January, and we're seeing things line up for new highs within the next month or so. This pullback that we've been talking about for a few weeks has also been the perfect sentiment reset before our next move higher, but we are seeing some excitement starting to trickle back in with rumors that Trump could issue some executive orders addressing crypto debanking and a new banking account policy when we have the inauguration on January 20th. And this cool-off we've seen also significantly reduces the chances of a buy the rumor, sell the news event, and instead we might see something similar to what we saw with the ETFs, where we saw a buy the rumor and then a cool-off and then a buy the news once those ETFs went live. And you can see this very clearly on Bitcoin's chart. We started getting rumors that the ETFs would be approved sometime around September, October 2023, and investors bought that rumor and Bitcoin rallied aggressively. We then cooled down for about 2 months, and then once the ETFs went live and started seeing inflows, we saw that news being purchased as well. And something very similar happened surrounding the election. We started seeing rumors on Polymarket that Trump would win around October, September of 2024. Then Trump wins the election and everybody starts buying the rumor of what's perhaps going to come around the corner. Is it going to be strategic reserve? Is it going to be more friendly regulations for the industry? We see a cool off in December, January, just like we saw in 2023. And now once he actually gets inaugurated, does he announce things that get the market really excited and result in the market buying the news as well? There's only one way to find out, but January will likely be full of excitement surrounding these rumors and announcements. This also aligns very nicely with our base case Bitcoin cycle scenario. After a large accumulation period, you have a breakout and then a cool off and then a blow off top into a very large correction. What have we seen this time around? Very large accumulation, breakout, cool off, and are we getting ready for that final blow off top move going into late Q1, early Q2, like our base case suggests? This is also what we've seen in previous cycles with the monthly RSI. Bitcoin heats up as it breaks above its previous high, then enters the mania phase and alt season period. We saw that in 2017. We saw that again in early 2021. And here we are heating up once again now that we're above our previous all-time high, but we still haven't entered that mania phase, crazy hype alt season part yet. But perhaps that's what we see over the next few months. So it looks like seasonality is pointing to a blow off top move over the next few months, and it looks like TA and price action is pointing to a very similar blow off top move as well. We also finally saw the sentiment reset that we wanted to see, that's similar to what we saw in early 2024 with market sentiment back to neutral. We've also seen a cool off in ETF inflows as investors took some profits, similar to what we saw in January of last year. And we also saw a cool off in MicroStrategy stock, similar to what we saw last year after all of those Bitcoin proxies had those huge blow off top moves. And that really just leaves one major variable for this next move to happen, and that is global liquidity. This is what I believe is the last piece of the puzzle before Bitcoin can really take off. And we did get some good news today that perhaps an increase in global liquidity is just around the corner. Core CPI came in below expectations this morning, which resulted in the market pricing in sooner rate cuts. So we were expecting to see core CPI come in at 3.3%, which would have been flat compared to what we saw in the last reading, but instead it ended up coming in below expectations at 3.2%. And this is a big deal because instead of staying flat or continuing to go higher, this is a reversal in core CPI, and it looks like it might be getting ready to break down over the next few months. Now, one data print is not a new trend, but it definitely gives some room for the Fed to cut rates sooner, and it gives the market room for some optimism that perhaps inflation will start going down if this trend continues, which allowed the market to pull up when these rate cuts are expected to happen, as well as increase the probabilities of more rate cuts. That resulted in the dollar index going down slightly, and we do need to wait for the weekly close for confirmation on this, but a reversal in the dollar index would be great to see, because that would mean that global liquidity could reverse and start going higher, which would result in our risk assets like Bitcoin and the S&P 500 breaking higher. Because now that we got that strong labor market data last week and recession fears aren't as high in the short term, we just need to see inflation to continue going down so the Fed will have room to cut rates more aggressively and increase liquidity in financial markets. As for my portfolio, no changes this week. As I wrote about in my free weekly report on Monday, I just don't really feel the need to make any changes. I'm happy with my current allocations based on how the market is currently set up. We did already visit that likely region that I talked about in my last video and swept the liquidity below all of those wicks that we've had over the past few weeks. There is definitely still a possibility to go lower, but I do think too many investors are waiting for that as of right now, and it would really take some type of bearish surprise to catch markets off guard and send us that low. But it's still a possibility I'm watching out for, and it's still an outcome that I'm mentally prepared for. We also did see Bitcoin wick very briefly into our expensive region before bouncing below 90K, kind of similar to what we saw in August of last year, when Bitcoin had that very brief wick into what we consider cheap below 50K, and then got a very large wick, and that ended up being the low of that correction. It's too early to say if the same thing is happening this time around. I want to wait for the weekly close for confirmation, but it is a good sign as of right now. We are still seeing Solana and Ethereum lagging Bitcoin, but I'm hoping that changes as we enter our final blow off top move to end out the cycle. Ethereum saw a nice wick below its two major moving averages, the 20-week and the 50-week, and took out all of the liquidity below these previous lows, which is a great opportunity for a price reversal. And I'm sure a lot of people panic sold the bottom. Similar thing with Solana here. It's been holding its 20-week moving average for a few months now, but then got that wick below it that I'm sure shook out a bunch of investors, and also got very close to its 50-week, the same place we bottomed in August of 2024, in September of 2024, and we got close to it in October. So that wick below its 20-week moving average, followed by a close back above it, would be a nice sign of a reversal if we end up getting that weekly close and confirmation. And I still think a Solana ETF would be a huge deal for its price action and would likely attract a lot of speculation and FOMO buying if we get some type of indication that it's going to happen after Trump's inauguration. As for traditional markets, the S&P 500 traded below its 20-week moving average briefly, but bounced alongside Bitcoin and other risk assets after this morning's core CPI print. As of right now, they are still trading side by side because a lot of this correction has been liquidity driven and driven by the strength in the dollar index, which is causing risk assets to trade quite closely alongside each other. But our long-term narratives are still fully in play. We still have huge federal deficits. That trend doesn't seem to be improving anytime soon and doesn't seem like it's going to improve in the short to medium term, even if Elon and Doge put in something that's going to help over the next few years. That's going to take a while to make any type of difference. So I still expect government debts around the world to continue ballooning, and I expect that to carry over into the money supply of the US and other central banks around the world, which is bullish for our risk assets like the S&P 500 and bullish for our risk assets like Bitcoin. And it's important to remember that we're still just 2 months into this all-time high break and expansion phase, so I would expect a few more months at the very least, especially because we're coming off of an 8-month reaccumulation period last year. And usually when you have that long of a reaccumulation, you're going to rally for at least half as long or even as long as you spent accumulating, which again aligns nicely with our late Q1, early Q2 cycle top thesis. But as always, let me know what you expect. Was that the bottom, that liquidity sweep below 90K, or is Bitcoin going to go lower? I think we're going to find out this week, depending on whether we get rejected by this range high or are able to confirm back above it. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.